Before we get to the charts, we've got a TikTok. / @ChartGuys, link in the comments of this video. It's run by Jason, and it's different content than what we put on Twitter and other social media. So check it out, give them a follow. Hey everyone, checking in on the markets today. I'm charting man Dan of the Chart Guys. We're going to look at the Tesla earnings reaction, how the rest of the market responded, and the key dollar chart that I'm keeping an eye on, as well as some relative weakness in crypto stocks. So SPY, daily higher low, higher high. We have a new benchmark level. We're just walking up our higher lows. All these little higher lows of support, keeping the bulls in control of this move. And we're looking up at our 2-week inverse head and shoulders resistance level, now 1% away. It's like a little child that we've been watching for a long time grow up and trying to finally spread its wings. If it confirms, we will zoom out. We'll watch 428. We'll watch our monthly resistance. Anything under 428 is a monthly lower high. But first things first, 408.61 now in play potentially this week. Hourly time frame, low of today, set an hourly higher low. So we opened, little gap up open today, and we knew any consolidation, we're looking for an hourly higher low compared to the low of yesterday, because yesterday was a straight shot up. We then had a falling wedge shape up that hourly higher low. I love falling wedges in a bull market. When you're in a bear market, the falling wedges do not go well because the bears have control of the trend. And a falling wedge in a bull market, when you're looking for a higher low on a longer term time frame, and here's QQQ, potential 5-minute falling wedge, bull break may shape up an hourly higher low. And it did. Such higher probability when you have a 5-minute falling wedge looking for an hourly higher low versus a 5-minute falling wedge when you're in an hourly downtrend and not looking for an hourly higher low. And again, we've got a video specific for wedges. Search TheChartGuys wedges, and I'm sure it'll come up on Google. So that was the hourly higher low. So anything over the low of today will be another hourly higher low, keeping the uptrend intact. And that is now my guide in the short term, the hourly uptrend. As far as the futures chart, there is an uptrending resistance line that we can be keeping an eye on just in case. If we were to pull back from here, it would be this, we're closing, 27 minutes to go. Yeah, we'll put it right there. And it would be something like that. But again, that's just me putting on my bear glasses to say, okay, what do I need to be cautious of just so I don't get overly confident. And the NASDAQ, again, daily higher high, and resistance of 296.17 is just over 1% away. Hourly uptrend and daily uptrend are our guides. Determine what matters most to you. If you're a swing trader, maybe it's the daily uptrend. If you are a day trader, it's the hourly uptrend. So QQQ, 5-minute falling wedge, set the higher low on the hourly. Strong close at the high of the day. A little bit of weakness after hours. INTC, bearish earnings reaction. And again, it's guidance. Where is that? There it is. So INTZ down fairly notably, 5% plus. And some of the semiconductors are being hit with that. NVDA is down a couple percent after hours. And QQQ is down slightly after hours. Again, not very much at all. But that's what's going on after hours. This pattern is important. The dollar came right up to resistance. So I need to adjust my resistance line because we did close just above it. But this rejection shows me, again, that this is a valid pattern to be keeping an eye on. The broader market bulls don't have anything to worry about and if we're not breaking bullish on this pattern. If we do break bullish, then that's a different story. But this is something I'm watching every single day. I'm not really zoomed in on the dollar. I don't care about the 15-minute. I don't really care about the hourly on an intraday basis. Maybe some of you find it helpful to be watching that zoomed in. I'm just sticking with the 4-hour for bigger picture. And for now, bulls are safe with another rejection. So semiconductors, daily bull flag confirmed. Again, this was one of the first sectors to break the weekly higher high, one of the first major sectors. We know the airliners already did it. Again, the more and more individual sectors that confirm this inverse head and shoulders on the weekly time frame, the more likely the whole market is going to do it. And so we got semiconductors did it after the airliners did it. And now Semiconductor's looking up at 244.28 on SMH. Again, same thing. Choose the time frame that matters to you, the hourly or the daily uptrend. We've got the hourly high or low at the low of today. We can see the negative reaction after hours to INTC. And I do have a swing in INTC. You may remember from when I was talking about it months ago. I was in somewhere back here. I sold half somewhere up here. I sold half where I was able to then put my stop under 24 risk-free. So it's in my IRA. If we drop down and break 24, I'll stop out risk-free. And if we don't, then I'll keep holding the position. I already got some dividends out of it, but already right now we're trading down, what, at 27? So definitely giving a lot back, but falling back within this range. It's more of a 2-week, or I should say a weekly equilibrium at this point. Weekly lower high set with the bearish reaction. 25.35 is a key support level. And NVDA, again, bullish with the sector today. Nice follow through, a little bit of after hours weakness. Definitely a bit extended, the daily RSI. You can see we're at the highest level that we've seen since the all-time high. And that's where we topped out previously. So if the low today breaks tomorrow, then that will be showing us Semiconductors weakening a bit. Tesla, congrats to the bulls. Big bullish earnings reaction. We saw profit taking on the morning and a really nice double bottom, held the low by 11 pennies. That set the hourly high or low, and then we closed up near the high of the day. One thing that you want to try and develop as a trader and a technical analyst is good memory in terms of when I was just prepping this video, I pulled up the Tesla chart. It was on this 5-minute time frame, and I looked at this and said, I've seen this exact pattern recently. Can anybody tell me where we saw this pattern yesterday? 5-minute pattern, same thing. I can't hear through the computer screen. You have to speak louder. So it was MARA. So look at the difference or the similarities. Double bottom, a little 5-minute tightening range, and then your bull break. It's a kind of like a falling wedge pattern, but because we didn't drop to the lower low, it's not a falling wedge, more of a descending triangle. But you look at MARA yesterday on the 5-minute time frame, same time frame as well as far as the morning. And what did MARA do yesterday morning? We dropped down, we double bottomed, and then we had that little 5-minute tight range, and then that was it. It broke bull. So very similar pattern, and Tesla bulls benefited. So now for Tesla, the low of today is our hourly higher low. Where's the next resistance level? There's a resistance zone at 161, which is not surprising that we pulled back from there on the morning. And you can see this resistance zone right here. So we're going back, and we're looking at this little 3-day triple top. 160, 162, 160, 93, 160, 99. So we can call that pretty much a triple top in the 160, 160s, and we topped out first thing right at that level. If we can clear that level, we're then looking up at 175 as the next level that stands out to me. And the hourly uptrend will be our guide. Heading towards daily overbought conditions, we've got weekly EMA 12 in play now. Definitely paying attention to that. Keep in mind, if you have a swing position on Tesla at this point, you have to make the determination, are you going to take profit before or after before weekly consolidation, or are you going to sit through it? Because we know, you look at any of the long-term charts that bottomed, whether it's Facebook with the little weekly trend change or Netflix with its weekly trend change, we know that has to happen for a long-term bottom to be set. So the question is, are you going to sit through Tesla weekly consolidation, which may be a pullback of 15% or more for the weekly trend change? A patient bull is hoping for a weekly higher low to try and play off of for that trend change. But again, just keep in mind that that's eventually going to have to happen if this move is for real as far as a longer term bottom. Healthcare, nothing to update. Still in the wedge, still not really a factor. That's that. We'll keep checking in on this until we break one way or the other. Financial sector hit the highest level today that we've seen in 10 months, 11 months. Very notable, 10 months, 11 months. Highest level in 11 months. It's not a convincing bull break, but it is a bull break. Longer term time frame now on the weekly Next resistance level is up at 37.68. And we've got a new benchmark level. That weekly high or low of 34.56 is now the most important level for us. And XLF is trying to rejoin Team Bull here. Again, keep in mind, I am on 4-month time frames on a lot of names. And if you want to talk about a real bear market, you've got to see 4-month downtrends confirmed. And we pull up SPY. I put this on my Twitter a long time ago without a label on it and said, are you bullish or bearish here, when it was this candle forming? And so again, if we confirm the 2-week inverse head and shoulders bullish, it's a great sign for the broader market bulls, but I'm going to be watching for the possibility, if we confirm a 4-month downtrend and lose the 4-month EMA 12 for the first time in 14 years or however long it's been, that's going to be a big, I mean, if you're a fundamental bear in the market, that's your holy grail of what you want to see happen. QQQ has a little bit more space for a 4-month lower high. We haven't even started the 4-month bounce in these names. Only our stronger names have. NVDA has, I believe. Again, look at NVDA. The most likely scenario for me is absolutely a 4-month lower high. It's just a question of how much retracement do we get? Do we look for an equilibrium or not? So you're going to hear me talking about the 4-month time frame every now and again. Maybe sometime I'll do a live stream that's only long-term outlook versus this day-to-day stuff. But 2-week and 4-month are time frames I'm using now that I have never used before. And that's just because that's where I find clarity, just by flipping around the different time frames. IWM also got the bull break, same as XLF. We know the financial sector has the largest holdings. I should say IWM's largest sector holdings are in the financial sector, so they trade very similarly. Bull break, no follow through. It was the highest level that we've seen in 4 months. And it is a weekly bull break, technically speaking, but it's a bull break with no follow through at the moment. Got to get over 200 for it to be very convincing. Biotech sector broke 89.63 first thing, but then it was weaker all day from there. And bears tried for the hourly bear flag, but were unable to confirm it. But we're just going to be using the daily uptrend. We got a daily stair-step pattern of a higher low every day. And we know next time we consolidate, anything above 84.16 is a higher low. Could this be a rising wedge? Potentially. I'm not really too concerned with it. But if I were going to draw that as a possibility, it would be something along these lines. And again, I just want to ensure that no candles are closing over my downtrend line, which is how I draw my trend lines. And it would be something like that. But I'm not worried about it at this point in time, as long as daily EMA 12 is support. Riot, so weaker today. Again, this resistance zone. 1, 2, 3, 4, 5 rejections. You just short in the upper 650s. You put your stop over 664, and that has now worked 4 times after the initial top was set. So it was a great bear. Again, the relative weakness is absolutely standing out to me. You look at the hourly chart for Riot. I don't know if that's a real print after hours. No. Not a meaningful one. So you look at the hourly. We had the pullback on the morning, a bear flag bounce. We didn't confirm the bear flag, but you compare that to QQQ and SPY. It's a night and day difference. And you even compare it to Bitcoin. And Bitcoin, as MARA and Riot were testing the low of the day, at that point in time, Bitcoin was testing the highest level in 7 hours. And Bitcoin's currently an hourly equilibrium. My point is, the last time I was recognizing that weakness, that relative weakness in these names, was the day before the big drop. The big drop being back here. So there was relative weakness on the 17th, and then on the 18th, Bitcoin dropped, and these names dropped with it, very notably. And I'm watching very closely, is Bitcoin going to break this hourly equilibrium overnight bearish, and is this going to be another instance where the miners gave us a heads up? Because I watch them every day this month, essentially, and they are very similar to Bitcoin and the NASDAQ. There's not much difference in how they trade. But then you get a day like today, and there's days where they stand out very strong, but you get a day like today where they stand out very weak. In a very strong market environment, it absolutely stands out to me. So we're watching close to see if the bears are able to follow through. keeping in mind these names will see weekly consolidation, same as Tesla. We will top out and we will pull back easily 20%, probably more along the lines of 30% plus when we top out. So an aggressive swing trading bear is watching very closely for signs that we are topping out. And Bitcoin itself is a little bit like a rising wedge. So just something we're watching. MARA down a bit more after hours. Heading back to test the low of the day. Gold. Still grinding, still not following through, still daily EMA 12, nothing to update. Silver, bounce following through, but unable to break resistance. Still in a short position, not holding my breath that I will survive. So really still just sideways choppy. The miners confirmed the daily bull flag yesterday, daily inside bar today. 12-hour EMA, daily EMA 12 support still in play, holding. Oil. So oil has a tightening daily range here. And you might look at that and say, is that a head and shoulders? You can make the argument that you have to be cautious of that. High, low, double top, higher, low, unable to break resistance today. The energy sector was our lead bull sector, up over 3%. Very notable. Look at what the energy sector did. Same pattern before today, and then just exploding up. And we're trying to confirm this 2-week bull flag to all-time highs. So energy is still extremely strong. The daily uptrend is our guide. We've been holding daily higher lows for the last 3 weeks. And so now we have to watch oil to see if it's going to join and help this move. But XLE, strongest sector today that I was watching. Ignoring that wick. Whenever I look at a chart, if you see a wick and you're like, should I pay attention to that? Look at the volume. We know that that kind of volume could not put in that kind of wick because there was more volume and the candle size was this. So if you're going to see a candle size 10 times that size and you're going to put in less volume, it's not real. So I ignore it. And natural gas, trying to get a bounce going. We've flushed $3 psychological support here. Hourly, decent bounce. But again, we need trend changes on the hourly, on the 4-hour. We're watching 12-hour EMA 12 resistance. There's a lot of people watching for this bounce. Again, you just got to remind yourself we can always go way lower than I think. I was just reminiscing. I'm pretty sure that I filled up my house tank for propane somewhere around there. I was running low. I had no choice. Curious what the price would be now. A whole lot less. I appreciate you watching. Don't forget to do good things out there. Gonna do a video hopefully this weekend about the AI hype sector and some things to watch for, some things to be aware of, to not get caught up in, because I have a lot of experience in hype sectors, as most of you watching this probably found me through a hype sector, whether it was crypto or cannabis. And before the chart guys, before I was making any content, I was going through penny stock, boom and bust hype cycles, and 3D printing. That was really my first taste. 3D printing, look at what it did. You want to talk hype? Let's go 500% in... That wasn't even the move I was talking about. That was wild. I was talking about this one. Let's go 1,000% over 2 years, and then let's drop 95% in the next 2 years. And that is your, I mean, that's, I don't want to give away the video, but that explains what hype sectors do. So, look forward to that. See ya. This chapter of Adventure Time, we're going to Capitol Reef National Park, and then we're going to Calf Creek Falls. Still making our way through Utah. And Capitol Reef is a cool one. It's similar in terms of landscape to other areas, but a little bit more majestic, magnificent, big rocks, some caves to nap in. And it's cool because they have an orchard inside the national park that they maintain, and some nice land and some farming in the middle of a national park. Sounds like a pretty good deal to me. This looks like the gates of Mordor, just huge rock masses with roads passing in between them. Nice little natural tunnel, or I should say a natural bridge over here. long stretches of open road, cool colored. I love how you can see, like I said in another video, pretty much just time where the different shades of rock aging over time as it builds up on itself. And the road back. And this is one of the farms areas. And again, you wouldn't think Utah would have some nice lush green grass, but definitely a healthy farm. And you can buy the produce from the orchards while you're in the national park. Pretty cool setup they've got going. Then I went to Calf Creek Falls, just a nice little hike. I think it's a state park. Let's see, the difference between national parks and state parks, obviously size and funding and amenities. And there's less to do most of the time, but they're nice little stops and there's more of them. So some states have a ton of state parks that just have a little thing like this. You know, you can walk up and take a little swim, and there's campsites and a campground. And I would travel, even when I wasn't, road tripping on a massive cross-country trip, I would, rather than stop at a hotel if I'm driving, 10 hours, I'd break up that drive by just camping in state parks along the way. You can camp for $10 as opposed to getting an $80 hotel room. This was some more petroglyphs on the side of a canyon here, and there was no sign. The trail to see this is, 100 to 200 yards away, and there's no sign that said don't leave the trail. So I left the trail and meandered my way up close. I had to cross a river and take all my clothes off and carry them over my head because it was up to my chest. That was a fun experience, a little midday adventure, and climbed up the rock and got real close to see the details of this painting. And we'll end it off with what I aptly named Blank Rock, and I'll let you all come up with your own names in the YouTube comments. This is in Kodachrome State Park. I think that's how you say it. I had Paul Simon's song stuck in my head the whole time I was there. But there were a lot of interesting rock shapes, as you can see. So that's it. We'll continue making our way through Utah. I believe we've got, forget the name of it, the next Bryce Canyon National Park's coming up next. Hope you all had a good Monday, and we'll see you tomorrow.